Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hidden in plain sight within corporate filings. This year, Bio-Rad is showing us a financial report that frankly feels like a wild roller coaster. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down these detailed reports and more. Alright, so we are diving into Bio-Rad Laboratories Incorporated annual report for the year ended the 31st of December 2025. Think of this like a yearly checkup for the company, a super detailed look at how they did financially and what challenges they faced. First off, some quick stats for you. Back in mid-2025, their class of common stock held by non-investors was valued at nearly $4.5 billion, while their class B stock saw about $23 million in value. By early February 2026, they had over 21 million shares of Class A and more than 5 million shares of Class B floating around. Now let's get into the thick of it, the actual financial story of Bio-Rad. For the year ending the 31st of December 2025, Bio-Rad pulled in $2.58 billion in sales. That's a tiny bump of 0.7% compared to 2024. Looking at it without currency changes, they are essentially flat. This means that for every dollar they made in 2024, they made pretty much the same in 2025. For a company of this size and market operation, not growing could be a signal that things are becoming tougher. Their life science segment, which makes up about 40% of their sales, actually saw a slight decrease of 0.7%, bringing in $1.02 billion. They specifically mentioned that the academic research and biotech funding situation is tight. Think of it like universities and smaller biotech firms not having as much money to spend on bio. Rad's research tools, which is a direct hit to their sales in this area. Currency neutral sales for this segment dropped by 1.3%. On the brighter side, their clinical diagnostics segment, which is about 60% of their business, grew by 1.6% to $1.56 billion. This part of the business deals with diagnostic tests for hospitals and labs. Their currency neutral sales here saw a small increase of 0.8%. They attribute this to steady demand for quality control and blood typing products, but note that lower reimbursement rates for diabetes testing in China put a damper on things. So while they are making progress in diagnostics, regulatory and pricing issues in certain markets are still a challenge. Now let's talk about how much they actually keep after making their products. Their overall gross margin dropped from 53.7% in 2024 to 51.9% in 2025. This is a concern. It means for every dollar of product sold, they are keeping about 2% less than the year before. In the life science segment, this drop was even more pronounced, down by about 2.5 percentage points. They blame this on one-time inventory write-offs, especially after recent acquisitions. Pretty much they had too much product or stuff that wasn't selling well and had to get rid of it at a loss. They also mentioned higher material costs and less efficient use of their factories because of lower production volumes. The clinical diagnostics segment also saw its gross margin shrink by about 1.4 percentage points due to higher material costs and less factory efficiency. Basically, the cost to make things went up and they weren't producing enough to spread those costs thinly. Overall, selling general and administrative expenses, meaning their overhead costs like marketing and salaries, went up slightly to $844.3 million. As a percentage of sales, though, it increased from 31.7% to 32.7%. This increase is mostly due to higher restructuring costs. Their spending on research and development actually went down from $295.9 million in 2024 to $275.6 million this year. This feels a bit concerning for a science company. They explain this by pointing to a big one-time expense in 2024 related to an acquisition that didn't happen this year. So while less money was spent overall, it seems like innovation might not be accelerating. Then we hit a big one, impairment of purchased intangibles and related items to the tune of $172.8 million. This is a large write-down of value. It involves two main things. First, they wrote off $81.7 million related to their 2021 acquisition of Dropworks because the technology development was delayed and revenue forecasts were revised. Second, they abandoned a project from their 2022 acquisition of Curiosity Diagnostics, taking a $127.7 million hit. Essentially, they invested a lot in these new technologies that either are not progressing as planned or have been completely scrapped. This is a significant hit to their bottom line and shows that some of their past investments are not paying off. Now, for the headline numbers, net income before taxes did a complete reversal. In 2024, it was a loss of $2.34 billion, but in 2025, they report income before taxes of $995.5 million. This huge swing is driven by that massive gain on their investment in Sartorius Ag. This is where you see a gain of $900.4 million million from changes in the value of their investments, compared to a loss of $2.65 billion in 2024. Most of this gain comes from an increase in the value of their investment in Sartorius. It really highlights how much their stock market performance outside their core business can influence their reported profits. So after all of that, Bio-Rad reported a net income of $759.9 million in 2025. That's a massive turnaround from a net loss of $1.84 billion in 2024. But remember, a big chunk of this reported profit is due to investment gains, not necessarily operational success. Looking at cash flow, they generated $532.2 million from operations, which is up from $455.2 million in 2024. This is positive. It means their core business operations are producing more cash, which is always a good sign. They mentioned improved working capital management as a reason for this increase. In investing activities, they used $189.7 million. This was mainly for acquiring Stilla Technologies, a company that develops digital PCR systems. This acquisition aims to boost their presence in the molecular testing market. Financing activities show they used $283.2 million. This is mostly due to buying back their own stock. They repurchased over 1.2 million shares in 2025 for about $295 million. This suggests they believe their stock is undervalued or they want to return capital to shareholders. Now let's quickly glance at the balance sheet. Total assets grew significantly to $10.57 billion, primarily due to an increase in their investments. Especially Sartorius ag liabilities also increased, but their total stockholders' equity jumped to $7.45 billion, showing a stronger financial position. One thing to note is the jump in goodwill from $410.5 million to $579.8 million. Goodwill is basically the premium paid over the fair value of net assets when a company is acquired. This increase is directly linked to the Stilla Technologies acquisition. Moving on to the risks, Bio-Rad operates globally, and this exposes them to complex foreign laws, currency fluctuations, and geopolitical instability. They specifically mention the war in Ukraine and Middle East conflicts impacting their business. They also face intense competition from larger players like Thermo Fisher Scientific and Abbott Laboratories. Developing new products is crucial, but delays in market acceptance are always risks. Reductions in government funding for research is a significant concern for their life science segment. Supply chain issues for raw materials and components also pose a threat to their manufacturing. Breaches in their information systems are a constant worry and could lead to loss of data and business disruption. This statement tells you everything you need to know about their investment in Sartorius AG. The value of this one investment has a huge impact on their financial numbers regardless of how their own business is performing. This is a pretty unusual risk. If their Sartorius stake becomes too large, they could technically be classified as an investment company, which would subject them to a whole new set of strict regulations. They are clearly watching this closely. And here we have the auditor's stamp of approval. KPMG states that the financial statements present fairly, and that Bio-Rad's internal controls over financial reporting were effective as of the 31st of December 2025. That is generally what you want to see. So what is my take on Bio-Rad's current situation? On the operational front, things look a bit shaky with flat sales and declining gross margins in their core segments. The life science segment is clearly feeling the pinch of reduced funding. However, their clinical diagnostics segment is showing resilience and moderate growth. The big story here is the massive swing in net income, which is heavily influenced by their investment in Sartorius Ag. While it's good to see a reported profit, the reliance on this external investment for such a large part of their profitability is a major point of caution. It means their core business needs to generate more consistent organic growth to be truly healthy and less dependent on market fluctuations of other companies. The significant impairment charges on past acquisitions are a red flag showing that their expansion strategy through acquisitions carries considerable risk and may not always deliver the expected returns. Looking ahead, Bio-Rad faces ongoing competition regulatory challenges and the ever-present risk of economic downturns. Their ability to innovate and bring successful new products to market is critical, especially as government funding and customer spending remain uncertain. Overall, Bio-Rad is a company with a strong presence in two vital sectors, life science and diagnostics, but they are navigating a complex and challenging landscape. Their financial performance is a mixed bag driven by operational pressures and significant external investment gains. The big question is whether their core business can pick up the slack and drive consistent growth independently of external market forces. What do you think about Bio-Rad's report? Are you impressed by the turnaround or concerned about the reliance on investments and past acquisition failures? Let me know your thoughts in the comments below. If you found this analysis valuable, give it a thumbs up and subscribe to Corporate Decoder for more deep dives into the financial world. And don't forget to join our Discord community linked in the description for more conversations and insights. Thanks for watching and see you in the next video.